Hello and welcome back to Debit Credit Done, the podcast that makes accounting feel manageable even on a wet Wednesday morning. I'm Dean, and in today's episode we're moving from checking the books to reading the story that they tell through the statement of profit or loss. Before we get into today's topic, let's start with a very quick review of the trial balance challenge I set at the end of episode 6. So here's a reminder then of the ledger balances you were given, which is I'm now showing on the screen. Sales revenue, credit of £3,000. Inventory, debit £1,000. Rent expense, debit £600. Trade payable, credit £1,100. Bank, debit £500. And capital, a credit of £2,000. So the trial balance should, if you've drawn it up properly, look something like the one that I'm just showing on the screen now, which will show total debits £2,100 made up of inventory, rent expense and bank. And then the credit side of the trial balance totaling £6,100 made up of sales revenue, trade payable and capital. So as you can clearly see, the totals don't match, and that's a great example of how the trial balance helps identify errors. So what went wrong? Well, most likely one or more balances were left out of the trial balance, transposed incorrectly, or just posted incorrectly into those various accounts. So if you spotted that the totals were unequal and started looking for the issue, well done. That's exactly what the trial balance is there for. If your totals matched exactly to £6,100 each, then your posting for the ledgers would have been correct. Obviously, that's not the case in this particular example. Either way, the exercise helps reinforce the idea that a balanced trial balance is a sign that everything so far has been accurately entered. So now that we have confidence in our ledger balances, we can move forward. And the statement of profit or loss is a financial report that shows how much income a business has earned and what expenses it's incurred over a specific period of time. Now, that specific period of time can be any period of time. It's typically monthly, quarterly, or yearly. Some businesses do weekly statements of profit or loss. It's common in certain sectors, but not so much in most sectors, to be fair. And that follows a very simple structure, doesn't it? Income minus expenses equals profit or loss. And the statement tells us whether the business is performing well or not so well. If income is greater than expenses, then you've got profit. And if expenses are higher, then the business has made a loss. So this statement helps business owners, accountants, investors make decisions based on how a business is doing financially. So there's two key sections to this statement, as I mentioned, income and expenses. Now, income typically includes things like sales revenue, fees for any services, things like commission, interest received, or any other form of business income. So it could be rent received, lots of other types of business income. And then expenses cover things like rent, salaries, utilities, depreciation, insurance, and all those other operating costs that businesses have. So I'm going to stick up on the screen just a quick example, which I'll talk you through. So imagine we've got sales revenue, £10,000. And then we've got some expenses to offset against that revenue. So the rent of our office, £1,200. Wages for our staff, £3,000. Utilities, gas and electric, £500. Insurance, £300. £500 worth of depreciation. And we've got total expenses then of £5,500. That would therefore lead us to a profit of £4,500. So sales revenue £10,000 minus the total expenses £5,500. You've got £4,500 left, which is profit for the period. So all of these amounts come directly from a trial balance. So you just simply take the balances from income and expense accounts on the trial balance and place them into this statement. So sometimes we show additional detail in the statement by breaking down the types of profit. So, as I mentioned, we start with revenue, and then we can subtract this thing known as cost of sales, which allows us to generate another number called gross profit. And then we can subtract all our other operating expenses and arrive at what's sometimes called the bottom line, but net profit. So let's take a quick example then. So I'm showing this up on the screen if you're watching the video. So revenue, £20,000. Cost of sales, £8,000. That would lead to a gross profit of £12,000. We then take off £4,000 worth of expenses, so other operating expenses, gets us to a net profit of £8,000. Now, this breakdown is useful for businesses because it helps to understand where the profit is coming from and how well a business is managing, well, firstly, its cost of sales and then also its other operating expenses. So let's go over a few of the common errors then learners make when preparing a statement of profit or loss. So one of the key things that we see is students including assets or liabilities from a statement of financial position and thinking that they somehow affect profit. Now, assets and liabilities, they live on a statement of financial position, which we're going to look at in the next episode. They don't directly affect profit. So you need to leave them out of the statement. The other thing we see is people leaving out indirect cost, so things like depreciation or insurance. Now, depreciation, it's not a cash item, is it? But it does affect profit. So they do need to be included in a calculation of profit or loss. And then swapping the order of expenses and income, or income and expenses. So doing them the other way. So doing expenses minus income, which clearly is going to give the wrong result. So just make sure it's income minus expenses equals profit. So my top tip would really to be highlight your income and expense accounts in your trial balance before you begin. And ideally, if you've got multiple colour highlighters, highlight your income in one colour and your expenses in another colour. And then just simply transpose them into statement of profit or loss. And that way, you're only including relevant items and you've clearly identified what the income is and what the expenses are. So the statement of profit or loss then helps us to answer two key questions. Are we making any money? And if not, where's it all going wrong? So it provides valuable insight into the performance of the business and helps decisions around things like pricing, staffing levels, overheads, and many other, cost-related decisions. It also feeds into the statement of financial position, where profit in year helps to increase capital, so the results have an impact on the overall financial health of the business. So let's just recap then what we've gone through in today's episode. The statement of profit or loss shows income and expenses for a period. The result of this statement is either a profit or a loss. It uses figures from the trial balance, and profit links directly into the capital section of the statement of financial position. So I'm going to set you another challenge at the end of this episode. So the challenge here then is using the following data, which I'm putting up on the screen as well as talking you through. I want you to prepare a statement of profit or loss. So we've got sales revenue of £18,000, wages of £5,000, rent of £2,400, electricity £600, insurance of £400, and depreciation of £1,000. So what I want you to do is to add up all the expenses and subtract those from revenue to give yourself net profit. And then what we're all going to do is we'll review that at the start of the next episode. So that's it then for episode 7 of Debit Credit Done. We've taken your trial balance figures and turned them into something that arguably is more powerful, more impactful, which is a statement that shows whether the business is profitable or not. In the next episode, we'll build the statement of financial position, which shows what the business owns and what it owes and how much is left for the owner. So that hopefully will bring the whole picture together. Now, if you've enjoyed this episode, please follow and subscribe. Leave us a review and share it with other AAT learners, your colleagues, anyone else you think might find, my podcast content useful. Thanks for tuning in. Keep your mind sharp, your ledgers tidy, and your confidence growing. This is Debit Credit Done. Until next time, goodbye.